Okay, so welcome to Systemic Flaws. This is episode 3, and today is all about stablecoins. So before we start, let's have a quick introduction. Let's kick off with Max. What's your name? What do you do in the company?
I think anyone that's been tuning in to this point knows who I am. I am the founder and CEO of Quantum Chain and the Quantum Foundation.
Okay. We also have someone else. We got Kai. Kai, a little bit more about yourself.
Pleasure to meet you. I'm Kai. I'm working with Max as the head of business development for Quantum Chain, and I'm here to talk about how we can make changes in the financial institution, basically. How we're going to save the world.
Absolutely.
I think you're underselling yourself, mate. As the head of BD, you're coming in here to make sure that the world sees Quantum Chain, to make sure that QC ends up within banks, within institutions, and to make sure we get quantum safe networks around the globe. That's a big job, and we're happy you're here.
Right, definitely. And that's a good segue to one of the topics that we'll be talking about in this podcast.
Absolutely.
All right. So on my side, my name's Nick. I'm the CMO of Quantum Chain. My duty for today is to facilitate this podcast and make sure that you guys get the latest scoop on the direction of technology, of fintech, of quantum computing, and whatnot. All right. So stablecoins.
Mm,
Based off of Max's LinkedIn, the Quantum Chain team did attend the Singapore FinTech Festival.
we
That was
did.
earlier this November 2025. So do you know that the theme was actually technology blueprint for the next decade of finance?
We did. And definitely on the next level of finance, quantum is definitely one of the pillars that's featured in the SSF for 2025. And we're very excited about it.
Hmm.
Yeah, one thing I definitely noticed walking around the booths and the stalls and meeting the people from the central banks and the institutions was that it's quite clear the direction is the convergence of quantum, of AI, of blockchain, and of stablecoins. Now, obviously, that's great for us because we sit right slap in the middle of that. So we had a great week. And because of that, we're actually heading to the Korea FinTech Week. We're heading to Malaysia Money 2020. We're heading to Jakarta Money 2020 and probably to the World Economic Forum in January too, and even beyond that. So it's clear that everybody is facing the same direction now.
Yeah.
Everything is moving on chain, and stablecoins are a huge part of that.
Could you explain to your everyday viewer what is a stable coin?
Well, there's a couple of types of stablecoins, but to bring it down to the simplest level, it is on chain money. Right? It is your dollars, it's your yen, it's your euros, it's your Great British pound sterling. That it used to be cash. We still have cash. Cash is the physical, the notes and the coins. And we've been on a journey over the last 15 years to digitize that cash. Of course, there's been some speed bumps and some inflation, etc. But we're still heading down that road. We're still eventually going to not outlaw cash, but it's going to be outmoded at some point. Now, this is really just the next stage. The internet has changed. We're moving towards a Web 2.5 sort of landscape. And as we believe at Quantum, everything is going on chain, and I mean everything. Your cash, your investments, your mortgages, everything is going on chain. So money is the starting point, really. I think people have been experimenting with RWAs and NFTs, and that's a nice petri dish. It's a nice sort of POC for what blockchains can do. But now it's getting serious. It's getting regulated, and moving money on chain now is the next logical step. So that's what it is. And just to sort of round that off, there are a couple of different types of stablecoin that we've seen. So the one that we all know, the one that we all love, the one that we all are going to use in the future is the fiat-backed stablecoin. Now that
Hmm.
literally means that $1 is one digital dollar. You know, of course, there's a process around that, but that's essentially what it means. So to quote something that you probably know of already, Tether, which is effectively an on Ethereum chain digital dollar, same as like Circle, for example. Each one is supposed to be worth $1. There's discrepancy on that, but let's not go into that right now. Then there's the collateralized stablecoin, which basically means that the coin's value is backed by something else, which could be a commodity or anything else really. And then the last one, something we don't really like anymore and has been deregulated pretty quickly because of its risk, is algorithmic stablecoins. Now, I think a lot of people were around when Luna crashed, and there's been a couple of other examples of algorithmic stablecoins that have not gone particularly well, but they still do exist. Maybe they'll reemerge one day. We'll see.
Coming from this, so you already said money on chain. You gave examples of what is already being used. A lot of people already are using the fiat-based one, especially whenever they're going to buy crypto. So what makes it different from your usual crypto, and how is a stable coin actually stable?
Let's stick to the fiat backed because that's the one we know. So we're going to stick to Tether and USDC. Again, these are both on the Ethereum blockchain, and we don't agree that that's going to be the future necessarily, but let's just stick with that as it is right now because that's where the liquidity is right now. So stable's the word. If these things are backed one-to-one, dollars to dollars, wherever they're held, and that price stays as it's supposed to be. The idea is with monetary policy, that value is not supposed to change unless there's inflation, deflation, cataclysmic events, or interest rate changes, let's be honest. So the idea is while you're invested in or holding assets that are a little bit more volatile, a little bit more dependent on market moves, your Bitcoin, your Ethereum, XRP, anything, you want to be jumping in and out of that, buying and selling effectively that asset. And the way to do that, like quickly and efficiently, is by making sure the assets you're trading on and off of are on chain. And so stablecoins being on chain and the asset being on chain, it's a very quick swap, a quick transition, a quick sell and buy. Whereas if you were trying to use fiat to buy Bitcoin and sell Bitcoin constantly, you'd be stuck with charges, inefficiencies, bridges, intermediaries that are not too dissimilar from the financial system we have now. And that's obviously something we're trying to get away from.
Yeah, and exactly, just tying in what you were saying earlier, it sounds like the convergence, right? Of bringing back into what is your traditional finance into the future of finance.
Yeah, I mean, again, we believe, and we've seen now that everything is going on chain. So eventually, and you won't even see the change. You'll go to your Starbucks or your Costa or whatever coffee shop you go to, whatever grocery store you go to, and when you pay for your goods, it will be done on chain. Your cash will be on chain. The message will be on chain. The point of sale system will connect on chain. And even the ledger that's keeping those groceries, inventorized is going to be on chain. That it's everything's
I
going
think,
there.
Max, we could add in that even Swift has moved towards the new ISO. So everything
Correct.
is on
Well,
chain.
two amazing things have come out of this, the Swift side. One is that they've at Cybos in Frankfurt have come out with the creation of an interbank ledger based on Ethereum, which there's two sides of that coin. There's a lot of people who think that's a step in the right direction, a lot of people who don't. And then the other news, like you say, is the move to ISO 2022 this week, which for us is great because what it effectively does is it changes messaging, which is the underlying system backing, well, making all of finance work. Because let's be honest, we've said this a few times, value doesn't move, money doesn't move, it hasn't done in a long time. We're moving towards a monetary system where the value is going to move again because it'll be done on chain. So there's just been messaging. And so now what's happened is the messaging system has become centralized and more widely adopted, and it's not just Swift dependent anymore. And that puts all traditional finance companies, businesses, and even Web3 businesses on an even keel now. And what's going to happen, I think, the next evolutionary step is mainstream banks are going to lose wallet share to this.
100% agree.
So if you were a mainstream bank, how would you prepare before you're written off of the charts?
Well, we talk to them a lot. We see them a lot. Okay. I don't think they quite understand the negatives that are coming with this, the shifts and the shift in tide. They think this was a great thing. They think that the narrative has come from the top. The messaging system is going to keep Swift in play, and it's going to mean more money towards the banks, more control to the banks. It's not. It's not, because what's happening is over the last 2 years, in the delay of getting ISO out there. Many other companies, like us, even like us being natively ISO, have been preparing for this moment. And with this move to blockchain and the banks struggling to even find out what it is, let alone keep up and provide new services, um, they're going to lose wallet share to this. And what's going to happen, what I think might happen in the next 2-3 years, and let's be honest, with the liquidity and capital that's with these large institutions, there's going to be mass acquisitions and mass mergers that are going to be coming, because these guys are going to need solutions that they don't have, that they've tried and failed with, adopting, let's be honest, the easy wins out there, like trying to use Ethereum, and then that's going to get undone very, very quickly. So it's an inevitable step for me.
Max, just a good segue. Would you say the Genius X is, I would say, the catalyst of this happening?
No, I don't. I don't think the Genius Act is a catalyst of this. I think it's a factor in the de-dollarization narrative. But actually, I think it's going to shoot stablecoins in the foot a little bit, because one main thing I saw in the Genius Act, I mean, besides being US driven, and the US has its own sort of ring fence set of policies and tax laws, but it's taken away the ability to generate yield and give it directly to the, I think is it the customer or the issuer?
I think it should be the issuer.
Right, exactly. And it's taken that away, which I think removes a lot of the incentive. But why that's been done is because they've already backed a horse. And we all know, in my view, I think they backed the wrong one out of many wrong ones. But I think the next year is going to be very interesting when, innovative companies who have really thought about this, really been in the trenches and come out with incredible solutions, are going to hit the market, and there's going to be no choice but to adopt one or many of them. Because in my view, we are in the AOL sort of stage of the internet boom in 2001. So soon we'll see the Googles, we'll see the IBMs, we'll see the Amazons coming around, and yeah, we are one of them.
All right. Okay. Okay. I think Clear have an idea of what is stablecoin, where is it going. But I am seeing a lot of articles still saying that other countries are not willing to get into stablecoins yet. You'd be surprised. China paused their stablecoin projects again because they feel like the regulations aren't in place.
This is not why.
This is
This is
not
not
why.
why. On this podcast, we tell the truth. We go a little bit beyond to make sure people out there don't get stuck in the propaganda, and don't just believe the headlines. China does not like the Ethereum system because China does not own the Ethereum system. I don't like it either. And I do not think it's anything more than a POC for the enterprise market. It is not meant to be used by enterprises for tokenization, for payments, or anything the like. And that's why it's patched, and there's just upgrades, like the recent upgrade focused on privacy rather than being, compatible with the banking system. So that's why it's highly likely they are attempting to build their own protocol. But then that will have the same similar issues that we have now, and that is the banks talking to each other on, through intermediaries, have high costs and latency.
I think it's all about transparency, liquidity, and how opaque and how transparent you want to be, right? Like, I feel like we need to hit that perfect middle spot where it's going to be widely accepted in interoperable in all banking situations and on regulatory situations, right? I think from what we're seeing in sandboxes, that's the way it's gonna go. They're testing different theories and different pilots just to see what works best. I think frameworks in different countries are like, I think what Max mentioned. In China, I think it's not that they're not willing to adopt. I think it's like a framework issue. It's also a governmental and political issue. So there's many facets of it.
Yeah, definitely agree with that. With the privacy thing, I think you're absolutely right. There was this idyllic sort of approach to blockchain where we wanted, people wanted decentralization. They wanted to be sort of against the banks, against governments, against SWIFT. They wanted everything to be anonymous and private. That was never going to happen because the banks were inevitably going to get involved. Regulators were inevitably going to get involved. If it was a tool useful for something, it eventually has to go through its maturity. But what the banks need, what retail needs is public transactions. What the banks need is private transactions. Now, creating a system in between that it's a little fragile, a little difficult, and it has to be done if you want to serve both markets. And actually, this highlights a big problem where there are banks out there that are creating consortium chains, which is effectively to replace what wholesale banking, things like benchmarking, even correspondent banking is, but they don't serve a retail purpose. And so they've created this segmentation between public chains and private chains, and creating L2s that talk between them or anything like that. More bridges is not going to create this interoperable technology that's suitable for the transaction banking global market. So there needs to be a way of splitting both. And what we've done at Quantum Chain is, not to give it away, but we have created our own internal segmentation of wallet systems where publicly initiated transactions, just like, Ethereum and Etherscan or Flare Scan, or whichever one you want to use, are visible with the limited data that usually comes with the wallet. And then you've got the next side, which is the private side, the private protocol, which basically means that we can onboard a client, let's say a bank. They have access to our QC Live system. They can see the wallets underneath, which are effectively your bank accounts, the transactions, and they can they have some custom functions that they can use while they're in there. So that's what the banks needed. That's what we created. And a lot of people are going to find out the hard way that that doesn't exist yet.
Is traceability something unique to you guys?
Unique?
Yes.
Not
Because
unique. Effectively, what that means is when you, let's say you perform a transaction on Ethereum, you go on your MetaMask, you want to send, let's just go with a meme coin, right? Let's say Pepe, for example, or Shiba. You want to send some Shiba to a friend, you know their wallet address, you go through the motions and you send some Shiba, paying the Ethereum gas fees to your friend. Right? He receives it even in his MetaMask wallet or whatever wallet he's got. Now, if you wanted to see that transaction, you can. That's the traceability. It's immutably presented on the Ethereum chain. And so you can go and find that on Etherscan, I think .com or .io. You can find the transaction hash, and then you'll see all the data behind that transaction. That's like how many of which coin you sent and like by who to what wallet, blah, blah, blah. Even timestamped and everything. And some of that data is very useful, but it's not enough. It's not enough to be compliant with payments, for example. You need a lot more involved in that. So KYC has to be done, for example. So traceability for a bank is even tighter. But what they cannot do is allow anyone outside of that jurisdiction to access that data, because that's people's data, right? And that's not just a GDPR issue. That's a huge issue. So only the bank who has authority over those transactions can see them, and then the reporting to the necessary regulators that they have. So that's again the difference between the public and private side of a blockchain that we need to have both of.
okay, I think we talked a lot, especially from a business perspective, from if I was the owner or the CEO of a financial institution. Let's bring it back to your everyday consumer. Stablecoin, with how it's currently being used, is really changing the game for remittance, for cross-border payments, even within a corporation.
Mm.
Could you dive deeper into that? How else can we change, yeah, everyday transaction?
The everyday consumer is not going to give a flying
What?
at all. They don't
Oh,
care. They're not going to care, because do you know what? And we said this on our last episode, actually. It briefly came up when we were talking about discrepancies in a generational perception on this. So you've got the everyday person who, let's say, needs to pay a bill, right? They'll go onto their bank. Let's say it's like DBS Bank. They'll go into the application, and then they'll initiate this payment, probably scan a QR code nowadays, or they'll add in whichever bill data they've got, add in the amount, they'll send the money. They'll get a little confirmation about that, and it's done. As far as the everyday consumer that's just initiated that transaction cares, As long as the user interface, the experience is simple and easy, and they can see that the money is correct, it's gone down, it's gone to the right place, they don't give a fuck about the infrastructure.
Yep.
Now, it's the bank that cares about the infrastructure.
Fair.
Now, that the everyday consumer is still going to get giant charges on these things, and this is why smaller remittance companies are gonna win here, because why the bank's going to lose market share, because the banks will not remove that $50 cross-border transaction fee if you're making a cross-border transaction. Which is crazy expensive. They're not going to remove that, even though the underlying system that they use means that the technical debt and the payment that they have to make, the fees that it costs the bank to make that transaction, are now almost nothing. They're still going to take the same amount of money from the consumer. I doubt
Yep.
they'll change that. Now, the smaller companies will play the hard game there, and they will lower those costs to like compete in a fashion that the banks are just not able to do so. And so this is what's going to happen. The smaller companies are going to do better. The banks are going to come down in share, and it's going to even the field out until the banks do something big, and then they'll start buying the small companies. We'll end up with a Gillette situation probably.
It's so true, Max. And I think Nick, like to quote one of the guys or like the key guy in Blockchain Association of Singapore, right? How he sees the market is gonna be that your uncle or your auntie is just gonna one day do a transaction on a blockchain, and he or she won't even know that they're doing a transaction on a blockchain. That's how seamless it's gonna be
Exactly.
eventually, right? Yeah. But who cares? It's the banks. And the guys like your remittance guys, your smaller guys, are going to take over what your traditional banking is, right? I think you can see even now through like Air Wallets and Revolut, they're taking market shares from traditional banks as well.
Yeah.
We can see those, and even the banks themselves are making a dupe copy of what like your Air Wallets is. They just rebranded themselves, and we can see that being even more prevalent as we go into 2026.
Well, I mean, Air Wallets is the banks. It was originally provided by DBS underneath, wasn't it? And I think now it's Standard Chartered.
That's true.
So
And
these are
even
just subsidiaries. And like you're going to have sub companies for things like custody and for MSBs and nested flows, basically. So that nested flows essentially is like a smaller company that you need to interact with someone that you don't want to interact with because maybe there's a regulatory gray area or some flag or something, and then they interact with their nested company. So it's like a small company working on behalf of a bank to interact with a bank that they don't want to work directly with. So there's going to be a lot more of that happening from a Web3 perspective.
So I'm a little bit heartbroken to know that the whole point, and this is how it's being published right now on all of the news lines.
Don't
The
believe
whole
those.
point of stablecoins is to reduce the amount of fees so that, sending money to, especially to your loved ones, if you, for example, you're working abroad, it is literally a third of the cost. And if you're saying that the big banks are not actually going to reduce the price facing the consumer,
Mm.
well, they get the margins.
Yeah, I don't believe they will. And, you're raising a good point about financial inclusion. I mean, here in Singapore, we know that there is a whole demographic of people working to send money home to families, and that happens all over the world. And if the cross-border fees, the remittance fees, don't go down, it's not going to change anything. And I'm sorry, I do think that is the case. But there are solutions. You can just don't get a big bank account. Go with a smaller wallet, something a bit more flexible. Now, I'm a Revolut user. I have been for many, many years. I'm looking forward to finding out the next big thing. To be honest, we're going to be making some of those ourselves. Sometimes you'll see our brand, sometimes you won't, but we'll be there. So we have to move that direction. The world has to move that direction. And if people can educate themselves a little bit and are willing to go find the more innovative digibanks and neobanks to conduct those transactions, then they will benefit. Absolutely. But if you're sticking with the big ones, I don't think it's going to change.
Okay. Okay. So, and stablecoins have actually been around for a good 11 years already. It's
Yeah.
only recently where now they are a global thing. How much longer do you think we'll have to wait before we will be seeing the future that you've been describing?
That's a good question, right? Like, you know, personally, from the people I'm talking to, countries like Indonesia, Thailand, even Malaysia, they all set up a timeline, right? Some 3 years, some 5 years, some 2030, but it's coming sooner than we expected, right? The only hurdle is who are they going to choose to peg their stablecoin to, right? That's the only
Mm,
hurdle, right? And also, are they, post quantum secure as well, right? If like, for example, if they are pegged to something like Solana or Ethereum, are they still gonna be doing that in the next 5 years? That's something that we need to think about, right? Yeah.
Yeah. Yeah, absolutely. We know that there are a lot of pilots going on right now on Ethereum, but we've also it's been made quite clear to us that while they're diving into that, they're also trying to dive out pretty quickly. So the reason that's happening from my perspective is because it is easy to build on. A bit like why Stripe, for example, exploded because with a single API click, you can send payments and whatever. And because they made it so easy, it's expensive. That's similar with Ethereum. Most blockchain developers out there who are now finding out that the banks are trying to hire them because there's a skill gap and it's much bigger than we think. They all work on Solidity and Rust. I mean, look, this is one reason why, at Quantum, we basically use the same sort of similar language. And if you took a smart contract that works on Ethereum and you replaced the E in ERC with Q, effectively it'd be compatible with our system to make that easier. But they will continue down these pilots for some time. They will prove a system, but really what's happening is the banks are getting used to wallets and Web3 style transactions and mixing those transactions with the relevant information in the messages that they need to be regulatorily compliant. And what I mean by that is you've got two types of payments. You've got a payment with a message and a message with a payment.
mm,
Now, TradFi and DeFi are the opposite. So TradFi, you send a message and then the payment is supposed to follow. It doesn't, but another day. Where DeFi, you can send the value and the message is not there. So now what we're doing is we're bringing those two things together. So it's gonna happen pretty quickly, I think. But then we'll see this slow unraveling of systems. And does that happen at the same time as the rise of quantum computers and thus the threat? I believe so. And so,
Well,
in as short as 1 to 2 years, I think we're going to be, or rather, I think the institutions are going to be scrambling for better solutions, and we're ready for the day that happens.
yeah. I think like Europol and the cybersecurity associations in UK are already saying like banks need to hop off into like a post quantum ready financial infrastructure by 2030. So that's like really soon.
Well, listen, even Vitalik has piped up again and said 2028 is going to be a problem, right?
Yeah.
For a quantum threat. Now, in my experience, when someone says 5 years, they mean two. They mean prepare now. They mean get it fucking ready. So we're already ready. We're live. We're already talking to 10 different countries about producing quantum safe stablecoins, and I'm super excited about that. So, you
Yeah.
know, this is why you're with us, Kai, and we're ready to put quantum chain in front of people, in front of banks, in front of countries. So yeah, this change is coming and it's happening. It's happening now
Yeah.
already. It's not going to take long.
And it's like what I say, right? If you see the military pivoting to using their quantum securities for DFIs and smaller financial institutes, you got to be prepared pretty soon.
Exactly. Yeah. And the other way around. I mean, our recent upgrade made us military grade. So, oh, by the
Perfect.
way, everybody watching this, I should make it clear. You know that I am obviously ex-military. So is Kai. He spent pretty much the same amount of time in the military than I did. Different country. But if he comes out with any military sort of acronyms, or if I do, then you know what's happened.
okay. And just to reemphasize, so for everyone who's still doubting that quantum computing is actually going to impact traditional finance, what do you think is going to happen to them if they don't hop on the train?
Okay, so the enterprises who are fighting this change, What's going to happen is the performances of quantum computers are going to go up. Qubits will go up. Logical qubits will improve. Error rates will go down. Application of these computing systems will increase. There'll be a high as to people finding out, new information about drugs, about new algorithms, new trading situations, you name it. And then it'll become commercially available. And then we'll see Q day. That is when quantum computers are used by nefarious individuals for illicit activity. These people are not going to attack your military institutions. They're not going to go after where nukes are stored. No one cares. They're going to go after your money. So they're going to go straight for the banks, and they'll probably start top and bottom sandwich attacking everyone. So what's going to happen to these institutions who didn't heed the warning now and make the changes now and put budget to these transformations now, or even just choose the wrong solution now? They are going to be scrambling for a solution when they realize that the standard offerings, the copy paste code, the copy paste encryptions, have fallen because standardized solutions, standardized targets. If what these institutions do is go find what is being touted as the latest quantum safe standard encryption, and they copy that and they wrap their systems in it, 100,000, 200,000 companies are going to do that. When one of them falls, they're all gone.
Yeah.
Every single one of them fails on the exact same second. So
Yeah. I think just to add on that, right? Why did we change from SHA-1 to SHA-256, right? Did we wait for a disaster? No, we upgraded, right? So I think for institutions that, still in doubt, why still doubting, right? You don't do it while you wait. It's disaster preparedness, right?
Yeah.
You don't wait for an earthquake to happen. You prepare for it.
yeah, that's true. But again, some countries out there believe that they'll never suffer an earthquake.
So now that we have an idea of what the global landscape is when it comes to stablecoins with post-quantum security, what is Quantum Chain doing about it?
Well, one of our huge pillars, and something that I'm working on deeply at the moment, and will be through 2026 and beyond, is our quantum safe stablecoins. Now that doesn't exist out there in the market. We are the first, and we are proprietary. So we have literally devised a way of making everybody's money and all global systems quantum safe, future proof. So with everything with going on chain, with all money going on chain, all cash, and all FX and everything, we are approaching central banks, governments, private institutions that are licensed in the correct way about creating these quantum safe fiat backed currencies for different countries. Now, right now, we are talking to 10 different countries on this, most of that from the SFF, some of it from before, and 3 of which we are looking to enter national sandboxes, and that is to create the currency for them and to test the system, and thus means integration with quantum chain as a whole. And then 7 more discussions on the way. On top of that, we have 5 companies, one of them being a bank, which we shan't name, have agreed to work on our system, have basically signed to do that from Q1 next year. So things are looking really good. But my goal, honestly, it's ambitious, but I want to recreate every single world currency on quantum chain, making it quantum safe and future proof.
I'm excited that we already have everything that we need, and we just need to get the word out there, right? And people to start using it. We're already well into being interoperable with almost every big player that we can think of within the region, outside the region. If you're creating a global conglomerate of a currency, we're there to help you, right? We're there to make you quantum safe. So maybe the next time will be Alaska.
We are having it. There is a group of 8 countries joining together to create a similar structure to the GCC in the Middle East that are looking at a unified, innovative currency. That is true. Yeah.
Yeah, and that's a thing that really brings a tingle to my stomach, right? Like we could be the first, landing on the moon, basically.
Basically.
Let's make it happen. So, Kai, Max, thank you so much for your time. amazing points on the future of finance when it comes to stablecoins, how that converges with traditional finance, what is going to happen to your everyday bank, your everyday remittance center if they don't hop on the train, and why banks have to be thinking about not just the current solution, but a solution that's good for them 5, 10, 20 years down the line.
100 years even. Yeah, correct.
100 years. All right. Cool. Thank you so much.
Bye, guys.
Awesome. See you guys.
Bye.